Hi, this is Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago. Well, here we are Monday, December 3rd, first trading day last month of the year. The pain trade continues to see on the upside right now. We have PMIs come out around the world. China came out better than expected. Europe in line, US was down just a little bit. All that to say, asset classes are gyrating around the flat line. But let's look at volatility. What are we getting into this week? Let's keep in mind last week, the equity vol, when we take NASDAQ, Dow, S&P 500, implied 1 month volatility moved from the 2nd percentile to the 6th percentile. So yeah, implieds moved up ever so slightly, but still on the cheap side of history. Oil on the week last week, down 1.3 points on the week, 1 month vol, 26%, and we're seeing a little bit of carryover of that today. FX vol, especially when we look at the G7, traded down to 6.3%, 1 month vol in aggregate, down about 0.5% on the week. It's also notable to point out that Euro, British pound, and Canadian vol, 1 month vol, now trading at a 1-year low. Moving on, what was the driver of volatility last week? Will it continue this week? Well, right now, the driver of volatility from last week moving on to today is both the fiscal cliff and emerging markets. Right now, it seems little else really matters. Believe it or not, sovereign debt doesn't matter as much as it did even 3 weeks ago. So it's emerging markets and the fiscal cliff. Now, when we talk about asset correlation in terms of volatility or contagion, what's keeping the ceiling on the VIX? What's keeping the VIX from going higher? And last week, it was sovereign debt, gold, and oil vol. Those three asset classes contained the VIX to about 16 on the high. And again, we moved from the 2nd percentile to the 6th percentile. Now, what kept the floor on volatility? What kept volatility from perhaps moving lower than where it was last week? And right now we can say it was European vol, European index vol to be quite particular, and also 10-year Treasury note vol. That caught a little bit of a bid towards the end of the week last week, keeping a floor on volatility at the end of the week. So we have a big week coming up here. We have ECB meeting later in the week. We have the jobs report. We also have RBA, the Royal Bank of Australia, coming out with the rate decision tonight. So a lot could happen with volatility, but most traders I speak to say we're range bound until further notice, until something gets figured out in Washington, D.C. I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago.